Today we'll talk about Google's challenge to NVIDIA's dominance, nuclear energy capacity in the US, 2 drone projects, the extension of Tesla's Robotaxi network, and since you guys asked, we'll end the video with an overview of my target prices for the stocks in the portfolio. Let's have a look at week 48. So it seems like the market finally came back to its senses. The portfolio was up about 9% this week and the Nasdaq and the S&P between 4 and 5%. Now this bounce back to me is about as meaningless as the dip of the previous weeks, because in the end all I care about is the underlying performance of the companies in the portfolio. And to me, the volatility of the past couple of weeks have been nothing but noise. But I hope you benefited from the chaos by picking up some great companies at a discount. So some of the positive sentiment in the market is no doubt linked to the fact that the chances of a rate cut by the Federal Reserve on December 10th have been increasing from about 69% last week to about 88% today, according to Polymarket. But as soon as we'll get past this rate cut, we'll probably all start stressing about the next one, which is planned for January 28th. And today, chances are about 68% that there will be no change in the rate. A couple weeks ago, we talked about the $80 billion deal between Westinghouse and the United States government, partially funded by the Japanese, to build nuclear plants in the US. Now, the Wall Street Journal reports that for this amount of money, Westinghouse is estimated to be able to build about 8 of their AP1000 nuclear plants, which would mean about a 10% increase in the US's nuclear capacity. In AI-related news, the Wall Street Journal reports that Meta is in talks with Google to start using their chips, called TPUs or Tensor Processing Units, instead of NVIDIA's chips for some of their AI works. Now, there are a few reasons why it could be interesting for Meta to use Google's chips. One of them is strategic diversification away from NVIDIA, who is now the major supplier, even though they'll probably still spend tens of billions of dollars at NVIDIA. But there's also a difference between Google's chips and NVIDIA's chips. NVIDIA's chips are general purpose GPUs, whilst Google's chips are what are called application-specific integrated circuits, or ASICs. And these chips are specifically designed for specific tasks to do those really well. In this case, AI training and inference. And that is why those chips, compared to more general purpose chips, are much faster at those tasks, cheaper and more energy efficient. And this is also the reason why Elon Musk, for example, is very bullish on Tesla's AI5 chips and the iterations that will come after it, and claims that it will perform for their purposes, so specifically designed for Tesla, much better than anything else. And in true Elon fashion, he writes, "We wouldn't use any other chip in our cars and robots even if they were free." So it's going to be interesting to see this development of companies moving away from general purpose chips to these ASICs chips, and to see how NVIDIA will respond to that. They will probably come out with something quite similar to this ASICs chips. Let's see. So in other AI news, of course, there's a massive build out of AI data centers going on, and you have some companies that have piles of cash lying around that they can use to invest, but all the other companies will need to get external funding to pay for their investments. And so what they do is they issue bonds, and the Wall Street Journal had an interesting article about it. First of all, they showed at the top chart just the magnitude of these bond issuances. You see it compared to the previous decade, basically, a massive spike. But secondly, there's the price that these companies are paying for these bonds, here expressed as the spread. So how much extra interest rate do they need to pay over government treasuries? And so here it's comparing CoreWeave, one of the data center builders, their bonds, they're comparing it to the interest rate premium that CCC companies need to pay over treasuries. CCCs are companies with pretty bad credit scores. And so usually, of course, these data center bonds were below, but now you actually see that they're going above the CCC index, which means that the market is perceiving the risk that the companies will not pay back the money increasing, so they're demanding a higher interest rate, which is interesting to see, and this is of course linked to the whole fear around the AI bubble. So moving on to company-specific news, AEVA, American Battery Technology, and Amprius all recovered this week by 14%, 11% and 12% respectively, but there was no company-specific news that came out. ACHR also recovered by 8.5%, and they gave a bit more color on their collaboration with Anduril. So this is Omen, a really cool looking VTOL drone produced by Anduril, and the powertrain, so the batteries and the motor, are supplied by ACHR. VTOL stands for vertical takeoff and landing, which is a specialty of ACHR. So just that you know what you're looking at, this drone is currently standing on its tail. It will take off vertically and it will land again on its tail. So this is one of two collaborations between Anduril and ACHR. The other one is the design and construction of a hybrid electric military aircraft. So I'm quite excited about this defense angle of ACHR because first of all, it's a whole different market besides their commercial market, but also because there will probably be quite a lot of innovation happening on the defense side that will feed back into their commercial efforts. Butterfly was up 17% for the week. They came out with some more information about Compass AI. So Compass is the operating system behind their handheld ultrasounds, to which they recently added AI. From what I understand from this workflow, it mainly helps to speed up the process with AI auto-generated documentation that enables the user of these handheld devices to have more time at the end of the process to verify the conclusions of the scan and of the notes taken, which in the end leads to more compliant studies, 94% in this case versus 15% apparently for traditional workflows. And more compliant studies will probably lead to more billing, which will mean a faster payback for the users of these systems. Then again, to show you that this volatility has basically nothing to do with the underlying performance of these companies, a whole bunch of companies for which there was no company-specific news. Howard Hughes up 6%, Nautilus up 1%, OKLO up 4%, PLTR up about 9%, and Recursion up 11%. Tesla is up 10% for the week. Elon posted on X that the Robotaxi fleet in Austin should roughly double next month. He also mentioned in previous calls that the safety driver, who is currently in the front passenger seat, who does nothing but is there to press the intervene button if anything were to happen or they would be close to an incident, that person should be removed by the end of the year. As he has stated before, they're being super paranoid about safety because as the current sentiment in the media for Tesla is pretty negative, so he estimates that if there would be one accident, it will be massively overblown. So they're being really cautious in that rollout, which I think is the right way to go. But it also means that it takes some time. But I think once they get this right and they manage to run the system with more cars and no safety driver, this is really ready to scale up. And it should in time be a really big chunk of the value of Tesla. Super interesting to see how this progresses. Samsara up 4%, no specific news. Moving on to Quantum Corner. Like I said, NVIDIA, one of the only stocks that are down this week, probably linked to the fact that Meta is bypassing them for part of their work by going for Google's TPUs. Then Google, no news on the Quantum AI front, up 7%, probably linked to that same news. D-Wave up 11%, also no news. IONQ up 18% for the week. I've posted a deep dive on the company a couple of days ago that you can check out if you're interested. So this is our second drone story of the day. They'll be partnering with Heven, AeroTech, a company that makes hydrogen-powered drones. And they'll be implementing IONQ's different technologies in 3 different ways that I'll just read out here. So first of all, to create an ultra-secure, reliable link between drones using quantum communications. As we go into in a deep dive, you can secure communication lines with quantum technology, which can be really interesting. They'll be leveraging IONQ's system to optimize fleet routing and the real-time fusion of drone and satellite imaging. That sounds a bit more like compute. Deploying quantum sensors for alternative positioning, navigation and timing on board Heven's drones. So interesting to see IONQ moving into a different vertical with their technology and a great use case for further deployment. And then to close out the news, Rigetti was up 8.5%, again no specific news. So as promised, let's have a look at my target prices for the stocks in my portfolio. Now, to define a target price is not easy for a stable company, and I only have growth companies in my portfolio, which makes it next to impossible. And I'll be making a video soon about my approach to valuation, when to buy, when to sell, but I'll give it to you a bit in a nutshell here. So what I try to do for these companies is basically 2 things. So I try to define a price that I think fairly reflects the potential of these companies, because they are great companies with great products, great teams around them. So for me, it's okay that they trade at a bit of a higher multiple than maybe other companies, but I try to get to a price that extracts maybe some temporary hype that is surrounding a company. Maybe quantum is really big in the news because Jensen from NVIDIA said something about it, and so everything doubles in price. Whilst to get to their full potential, maybe it takes another 5 years to get there. So there I would say, okay, the price level due to the hype that is surrounding the stock today is not realistic. So I subtract that and to get to a level that is more reasonable. Because I believe if, again, let's say the stock will realize its potential in 5 years, it makes no sense that in year 1, due to some positive news, it is already going sky high. And probably when the attention of the market goes away, or because there's a dip like we've seen recently, it will go down again and to a level that will be interesting. You've seen that, for example, with IONQ, the company I did a deep dive on this week. It halved in price versus where it was a couple of weeks ago. To me, that means that there was some hype going on there. So in this overview, you see the percentage difference between the current stock price and my target price. And here, when it's in green or negative, that means that the current stock price is below my target price. And so I would be thinking about building up my position. And in orange, it's close to my target price, but maybe a bit high. And in red, I think it's maybe too high for the moment. Now, that doesn't mean that I don't think these stocks will go way, way higher. I just maybe think the height of the price level is a bit early, and so it will probably fall back in the interim before going higher in the next couple of the next time frame. So this is a percentage difference, and here you can see the list of my different stocks with, again, that percentage next to it, the current stock price, and on the right my target. Again, very important to remember that this is my almost intuitive price target for these stocks. You really need to come up with your own feeling for it, but feel free to use this as a starting point to build from. So this brings us to the end of this week's news update. If you enjoyed it, please subscribe, tell a friend about the channel, and I'll see you next week. As always, these are just my opinions. Please supplement it with your own research before making an investment decision.